Hey everyone, and welcome back to the channel where we decode the business decisions that actually shape your success, from law and finance to the psychology of entrepreneurship. Today, we are diving into a decision that literally determines your future, legally and financially. LLC versus sole proprietorship. What's legally better for you? Whether you are launching a business, freelancing full time, or just starting a side hustle, the way you structure your business isn't just paperwork, it's production, it's taxes, it's credibility, and it's mindset. We are going to unpack the legal protections and liabilities of each structure, tax optimization secrets that could save you thousands, how each option affects client perception and brand psychology, and what this decision means for your long-term scalability. Stay with me to the end because I will reveal the three most common mistakes new business owners make when choosing their legal structure and how to avoid them. Let's jump in. Moving forward with first one, code differences explain. Let's start by defining the basics because most people skip this part and end up legally exposed or overpaying in taxes for years. A sole proprietorship is the default business setup. If you are running a business and haven't registered a company, guess what? You are a sole proprietor. That means everything your business earns and everything it owes is legally yours. No separation, no protection. Now, on the flip side, we have an LLC, short for Limited Liability Company. This structure creates a separate legal entity. Your business is no longer you. It becomes its own thing, which is powerful. Think of it like this: with a sole proprietorship, you are walking a financial tightrope without a safety net. One lawsuit, one bad contract, one mistake, and your personal bank account, your car, your home, they are all on the line. With an LLC, you have got that legal safety net. Here's what wild. Many people don't realize that forming an LLC doesn't have to be expensive or complicated, and yet the consequences of staying a sole proprietorship can be catastrophic. We will get into real examples shortly, but for now, just remember LLC is equal to protection, sole proprietorship is equal to exposure. Moving forward with next one, taxation deep dive. Let's get into what really matters: your money. As a sole proprietor, you are taxed as yourself. All your business income is reported on your personal tax return, Schedule C of your 1040. You will pay federal income tax, state income tax if applicable, self-employment tax, and here's the kicker: there's 15.3% right off the top for Social Security and Medicare. No deductions for paying yourself, no splitting income for tax strategy, no payroll flexibility. You are maxing out on taxes legally. Now here's where the LLC shines. By default, single-member LLCs are taxed just like sole proprietors. But, and this is a game changer, you can choose how your LLC is taxed. Electing as C Corp status allows you to pay yourself a reasonable salary, then take the rest of the profits as distribution, which are not subject to self-employment tax. That one move, it could save you thousands, especially if you are making $60,000 or more annually. Data doesn't lie. The IRS estimates that electing as C Corp status can reduce your tax liability by an average of $5,000 to $10,000 annually for small business owners. So if you are serious about keeping more of your money, the LLC plus SC Corp combo is like a tax optimization superpower. Moving forward, the next one, cost and paperwork. Now let's talk about what scares most people off. Cost and paperwork. The sole proprietorship is the easiest to start. No formal registration required, no setup fees, and minimum ongoing maintenance. You just start doing business. Boom, you are operating. Sounds great until the risks catch up. LLCs require a bit more, filing articles of organizations with your state, paying a one-time formation fee, which ranges from $50 to $500 depending on where you live. Some states charge annual report fees or franchisee taxes. But let me ask you this. If it costs $150 to protect your entire life savings from a lawsuit, would you do it? Of course you would. And that's the point. The cost of not forming an LLC is far greater than the cost of forming one. Plus, you only file it once. You don't need a lawyer. There are platforms that do it in under 20 minutes. So don't let paperwork stop you from protecting your business and your peace of mind. Moving forward, the next one, legal protection explained. Here is where the rubber meets the road. Legal liability. As a sole proprietor, you are legally responsible for every business step, every contract, every vendor issue, and every lawsuit. If a client claims you breached a contract and sues, your personal savings could be wiped out. If your contractor makes a mistake and someone gets hurt, you are liable. Now imagine the same situation with an LLC in place. The lawsuit hits your company, not you. That's the firewall the LLC gives you. And here is the real stat. Over 19,000 small businesses lawsuits were filed in 2023 alone, and more than 60% of sole proprietors settled using personal funds. That should terrify and motivate you to structure smart. Think of the LLC as the legal seatbelt. You hope you never need it, but when you do, it can save everything. Moving forward with next one, business credibility and growth. Let's talk business image and how it impacts your income. Which sound more professional? Jane Smith, virtual assistant, or Smith Solution LLC, strategic virtual services for entrepreneurs. Your name is your identity. Your LLC is your brand. Clients, vendors, and even banks view LLCs as more trustworthy. It tells them this person is legit. They are invested. They are stable. And their psychological edge matters when you are bidding for high-ticket projects, applying for credit, or negotiating deals. Plus, an LLC gives you room to grow. You can bring on partners, hire employees, apply for funding, even convert to a C Corp later to scale nationally. With the sole proprietorship, you are always seen as a one-person show. With an LLC, you are playing at a higher level, even if you are just starting out. Moving forward with next one, business banking, credit, and loans. Let's talk money mechanics. As a sole proprietor, Most people mix personal and business finances. That's not only sloppy, it's legally dangerous. You risk something called piercing the corporate veil. It means if you get sued, the court can ignore your LLC protections if they see you are using your personal account for business. With an LLC, you can open a business bank account, apply for business credit cards, and access small business loans. Banks and lenders treat LLCs differently because they come with structured legitimacy. So data point here would be like of LLCs are 3.5x more likely to get approved for a business loan than sole proprietors, especially when filing for SBA loans or startup grants. Want business credit that doesn't touch your personal score? Start with an LLC, get an EIN, and register with Dun and Bradstreet. Moving forward with next one, mindset and psychological impact. Let's shift from legal to psychological. Forming an LLC is more than just filing paperwork. It's about declaring your business real to the world and to yourself. LLC owners are statistically more likely to charge higher rates, set firm boundaries, delegate and outsource, pursue large contracts, think long term. Why? Because they have stepped into the identity of a real business owner, and your clients feel that. People pay more to people they trust, and trust you build through structure, branding, and consistency, all of which begin with choosing the right legal framework. So forming an LLC, it's a confidence upgrade, a reputation upgrade, and a wealth upgrade. Moving forward in next one. So which one is right for you? Here's the verdict. Let's keep it simple. Sole proprietorship is great if you are just testing the waters. Your income is under $100,000 per year. You have no major risk exposure. You want zero setup hassle. LLC is better if you want to protect personal assets. You want tax flexibility. You want to grow, scale, and look professional. You are making more than $10,000 per year. So power tip here would be you can start as a sole proprietor and upgrade to an LLC when you or income or risk profile increases. Just don't wait too long. Lawsuits don't wait until you are ready. So what's legally better for you? If you are in the game for the long haul, the answer is simple. LLC. The cost is minimal. The protection is massive. The credibility is priceless. Still got questions? Drop them in the comments and I will answer personally. Like, subscribe, and share this with someone starting a business. Because structure isn't just legal, it's powerful. See you in next video.